Less than 2 months ago, the owner of this wallet provided a bit over $900,000 in liquidity to the wrapped ETH to AAVE liquidity pool, and they already made $377,000 in profit and have achieved a 64% ROI. They were using this untapped strategy known as liquidity as a service. Let's look at this other wallet here. They provided almost $10 million in liquidity, and they came out with a profit of $4.5 million so far. That's a 47, almost 48% ROI. This wallet started providing liquidity a bit over a year ago, but these are still very impressive returns using this strategy. If you don't already know what the liquidity as a service business model is, let me explain it to you. It's super simple. So you know how there's decentralized exchanges like Uniswap, Orca, and more? Well, for traders to swap one asset for another and to make transactions happen, these exchanges need liquidity. So for example, if I were to go to Uniswap and swap ETH for AAVE, if I were to swap 3 ETH, I would get 44 AAVE. But look, when I make the transaction, there's a fee. It says I'm paying a fee, almost $30 fee. Now what's really cool is that a percentage of this fee gets paid out to the people providing liquidity for this swap to even occur. So a percentage of this fee is getting paid out to people just like me that do this liquidity as a service business model. Later on in today's video, I show you some really interesting liquidity pool opportunities I found, so make sure to stick around. But for example, if you go to DeFi Llama here and go to the pools section, you can see some liquidity pools. You can see their APY, the TVL, but there's not too much data that we have. We can't go back in time and see the past liquidity distribution. First of all, on these websites, you can't simulate your positions. And second of all, you can't look at old data to try to evaluate your positions. Like for example, you can't look at past volume history of these positions, which can be very important when doing your due diligence. That's where Metrics Finance comes in. It's the best software for 1, finding liquidity pool opportunities, 2, simulating your positions, and 3, building out your portfolio. So we can go over to the Discover section here to our exchanges and networks. We can go ahead and select all for exchange and then select all for networks. We'll keep it pretty broad for the sake of this video. So we're going to go to our fees APR filter and set our filter to higher than, let's just say 20% APR positions. And now on the right, it says we have 1,348 pools to go through. That is a lot of pools, obviously. So we're going to have to add some more filters to filter down our results. So we can go to the TVL section, add a higher than, and we can look for pools that have higher than $2.4 million TVL. You don't have to be too strict with the number you're using. I just like to do anywhere from like the 2 million to 3 million range. Now we're at 307 pools. This is much better. Now, right off the bat, we're going to see some meme coin pools here and there, like wrapped ETH to chill guy. I personally wouldn't want to take on exposure to any pools that contain meme coins. My goal is to make long-term, passive, consistent income. And I don't want to be just trying to aim for some high APRs from some meme coin pool that could disappear soon. So we see wrapped ETH to Pepe, wrapped ETH to chill guy, stuff like that. I'm not going to look at that at all. I am interested in wrapped ETH to USDC, wrapped ETH to Bitcoin, USDT to wrapped ETH, in pools of that nature. So for wrapped ETH to USDC, we can go ahead and simulate our position. You can see it says $536 million in TVL, and the fees APR according to metrics is about 62%. So we can go ahead and simulate this in a new tab. And if you're excited to see how whales are making a lot of money from liquidity providing, make sure to subscribe, hit the bell to turn on post notifications so you don't miss a video. I have a ton of content coming. So now we're on this simulation page. Now some of these features are available using the free version of Metrics Finance, and some are available in the paid plan. To simulate our position, we can enter our deposit amount. I'm going to go with $10,000. And now we can change our calculation range. I like to first zoom out to see how this pool has performed over the past 90 days or so, and then we can zoom back in. I like to zoom back in to hopefully try to get the most accurate simulation possible. So I'm gonna go to about the last 23 days. Remember, there are risks to this DeFi investing, such as divergence loss and other risks. I'm not a financial advisor. Make sure you do all your due diligence before investing into anything. So now we could go ahead and find our range. Here at Builder Wealth, we have other videos showing how you can find a range, but in this video, I'm showing you how to find these positions, and I'm showing you what whales are doing to make serious serious money from this. So if we were to make this slider go down a bit, the max price, you can see our APR is going up. Now, basic rule of thumb, guys, is look, this is a very simple concept to understand. The tighter the range here, the APR goes up. So look, if the range is like this, tight, you can see we're getting 85%, 86% APR. But if we keep it wider, we're now getting 52%. Now, people might have different investment styles. I personally here on the Ryan Capital channel want to have my investments very passive. So I will probably have a wider range, something like 2,895 to 4,421. And with this range, I'd be expected to get a 53% APR. Now, that's solid. That's solid. I could, again, go a bit tighter of a range to try to squeeze out extra APR. Now it's saying 61%, but I'm not too worried about squeezing extra 5% APR. I'm here for the long run, for long, consistent returns, hopefully. So scrolling down, you can see the volume history of this position. This is very helpful to look at. And here you can see how correlated the assets are. It's a really cool feature of the pro version of metrics. Now you can see these assets have a 0.06 correlation rate, otherwise known as 6%. And scrolling down, you can see people that have the top positions. So to check out what some of the whales are doing, you can sort by liquidity and see people that are providing a lot of liquidity into these pools and scroll down. So here I found this wallet where 5 months ago they provided their liquidity, which is equal to $321,000, and they have a bit over 12% ROI. So I'm going to go ahead and open this in a new tab. It's going to go to Uniswap, and then under this little thing that looks like a phone, I'm going to click owner. It's going to bring us to this page here. I'm going to go to the top, copy the wallet address, comment below if I'm going too fast, but hopefully I'm not. Then let's go over to Metrics Finance, scroll up, and let's go to the track section at the top. This is a really cool feature that the developers built out. So I'm going to open it in a new tab, and we can paste in the wallet address at the top and see their position and see what they're doing. So I'm going to go ahead and paste that in, hit search. And here you can see their current liquidity, which is almost $390,000. And here you can see their earnings. It says $89,000 in earnings. And you know what those earnings are? It's back from over here when I talked about how when traders are making swaps or trades, they're paying a fee. Here, that's these. They add up a ton. Let me go back. Here, these earnings are the fees that this wallet has been earning. So with their asset appreciation plus the fees that they've been making, they are up $108,000 with a 41% APR. That's solid. And according to Metrics Finance, they're expected to make around $13,000 in the next 30 days. So just take that in, how powerful this liquidity as a service strategy can be when used correctly. We do have a community called DeFi Excel that teaches you everything you need to know to get started with DeFi. Let's be real, you can be missing out on yield potential of 50 to 100% APR if your crypto is not being deployed into liquidity pools. Now the thing is, if you go about this strategy on your own, 80% of people quit DeFi within the first 3 months because it can get a bit confusing. They also don't have the right tools, education, and resources at their fingertips. And that's where DeFi Excel comes in. Our goal is to help you be a profitable and confident DeFi investor. We've built a clear and structured approach to DeFi mastery. It starts with the big four, which is learning about blockchains, cryptocurrencies, smart contracts, and decentralized finance as a whole. And then we dive into the DeFi fundamentals. Then we'll get you onboarded where we can show you how to deploy capital fee-free. And then we'll also help you build out your portfolio and provide you with the resources to manage your portfolio. Right now, it's at $47 a month for the lowest tier, and there are multiple tiers out there, but we always recommend that you start with the lowest tier to try it out. Anyways, the link will be in the description, but let's continue with the video. So we saw that wallet that looked like they were making solid money from this liquidity pool here. And if you wanted to try to replicate their success, you can go ahead and do your due diligence on these assets, USDC, wrapped Ethereum, do your due diligence on this liquidity pool. And if you say you want to take on exposure to these assets and get into the liquidity pool, you can save it to a portfolio in the top right. Now, doing my own research, I found this pool, wrapped ETH to AAVE. It says 112% APR with a bit over $16 million in TVL. Let's go ahead and simulate the position. We can go ahead and find our range first of all, adjust our max price and min price. I'm going to be pretty broad again. And with this very broad range, it says we're doing over 100% APR. That's a lot of money. So even on a $10,000 investment, or let's just say $15,000 investment, every month we'd be expected to get a bit over $1,000 and yearly expected to make over $16,000. That is really good. Now again, these APRs can go up and down depending on the market. I like to go ahead and look at the volume history to try to see how stable this pool will be. This one looks in the middle. It had some pretty high days, like December 2nd, it had almost $20 million in volume. And then on the 20th and 21st of November, it had under $3 million in volume. Now it still has over $2 million in volume even on its low days. So that is solid in my opinion. And these assets are pretty correlated, which is nice to see. 76% correlation. So you could do your due diligence on these assets, AAVE to wrapped ETH, and see if you want to invest into them. So you can do your research. I personally like to invest in liquidity pools where at least one of the assets is a stable coin. But if you're trying to go for the higher APRs, this could be a solid strategy for you. Just make sure you're doing your research. So if you wanted to enter the liquidity pool, you could save it to a portfolio in the top right, then go to the build section and actually go to the decentralized exchanges and deploy your capital. I'm so glad I have the Metrics Finance software for finding liquidity pools and simulating my positions. Without this software, I would be lost. Just a disclaimer, here at Builder Wealth, we are the owners of the Metrics Finance software, and in the DeFi Excel community, you get a free trial of the Metrics Finance software so you can try it out. Anyways, make sure to subscribe and hit the bell to turn on notifications, and I'll see you in the next one.